InvestorIdeas.com Podcasts.
Good afternoon, and welcome to another episode of InvestorIdeas.com Podcasts. In today's podcast, we're looking at a few private and public company announcements from the Green Organic Dutchman Holdings Limited, trading on the TSX as TGOD and the OTC as TGODF. Also looking at Fire and Flower Holdings Corporation, trading on the TSX as FAF and the OTCQX as FFLWF, as well as Greenline and Myconic Capital Corporation, formerly known as Aurelight Investments Incorporated, trading on the CSE as MEDI. So first today, looking at the Green Organic Dutchman, who reported its results for the fourth quarter and fiscal year ended December 31st, 2020. And these filings are available for review on the company's website as well as on their company profile at cedar.com. So some of the financial highlights included the fourth quarter revenue of $10.92 million, a 91% increase quarter over quarter. Canadian cannabis revenue of $8.55 million for the quarter, an increase of 122% over the prior quarter. G&A reduction of 59% compared to the same period in 2019, and a full year revenue of $24.51 million, 121% increase year over year. And again, you can read all the other financial assessments and notes in the article, or in the link attached in the article, or on the company's website. So the company also announced that its board of directors has appointed Sean Bovington as Chief Executive Officer and member of the board, effective immediately. So Mr. Bovington had previously been appointed as the interim CEO and is now the official Chief Financial Officer. CEO, Chief Executive Officer. Sean has been very effective in leading the company through this extremely challenging past few months. He stepped into the interim CEO position and has demonstrated outstanding leadership, stated Jeff Scott, chairman of the board. Sean has the strategic vision and experience to effectively guide TGOD through the next phase of growth, and on behalf of the board of directors, I'm very pleased to appoint Sean as CEO of the company. Now, we delivered strong growth in 2020 thanks to the expansion of our product assortment, including the launch of Highly Dutch, a continuous improvements on our supply chain. Now, this accomplishment, realized against a challenging backdrop, reflects the quality of our products underpinned by our talent and committed team, commented Sean Bovington. Now, we remain laser focused on operational execution as we chart the course for future growth, including opportunities in Europe, Mexico, and the U.S., and we remain optimistic about the company's financial prospects, but envision a path forward where continued financial discipline will play a key role. While our Canadian facilities continued to remain open as providing an essential service to our customers during the COVID-19 pandemic, we note several retailers were not able to remain fully open, especially during the first quarter of 2021, and therefore we expect a delay in the rate of growth until at least the second quarter of this year. And our recently launched Organic Sugar Bush, a high THC sativa variety reflecting the quality and potency improvements we've achieved, and our new hash SKUs are expected to provide an added boost to our sales mix in the coming months, added Bovington. So Green Organic Dutchman, again, having a little bit less favorable results than some of the other companies, again, still having almost 100% increase either quarter over quarter or year over year. That being said, a lot of companies were getting up to 300 and 400% of that same category, so obviously a little bit further behind, and a company that has had difficulties in the past, but it does seem to be that they're turning this around. Again, I've talked a lot about the Green Organic Dutchman over the years, and have really been a fan of this company and the ideas that they're trying to focus on, especially being a certified organically grown cannabis right out of the gate. And I think that now is starting to translate into higher yields and better revenue streams. And you're now starting to see that also the products that they have available in stores are a little bit more curated to the proper consumers that they should be, and you're starting to see that, again, they've removed some of their unsuccessful products and have really focused on what is creating the best revenue for them, as most of these large-scale producers are doing. So nice to see that this strategy is starting to pay off. It'll be interesting to see if they can get into those other markets, Europe, Mexico, and the U.S. Obviously, everyone is aiming at the U.S. right now. Speaking of which, that leads to the next announcement, which is from Fire and Flower Holdings Corporation, who announced today that its wholly owned indirect subsidiary, High Fire Incorporated, has now entered into a strategic agreement with BDS Analytics to incorporate High Fire's Canadian digital retail and analytics into BDSA's existing online U.S.-based market research platform. And as part of the agreement, BDSA will offer High Fire IQ Canadian cannabis data to its U.S.-based patients and clients, and High Fire will be able to provide U.S. data from BDSA to its Canadian clients, allowing both companies to offer enhanced cross-border data to the respective consumer bases. So Matthew Hollingstead, president of High Fire Incorporated, commented, "A key aspect of Fire and Flower's growth strategy is to strategically incorporate alternative high-margin revenue streams into our business model in order to drive profitability while building a leadership role in key cannabis markets around the world." Now, our High Fire IQ trademark analytics platform has proven successful in Canada, and it's represented as one of the strongest avenues of high-margin growth for our business and is recognized by licensed cannabis producers, equity research analysts, investment banks, hedge funds, and consulting firms as a leading cannabis data platform in the country. Extending this platform into the U.S. is an excellent opportunity to accelerate this revenue stream. Now, Hollingstead continued that our unique High Fire platform has generated widespread demand from our leading cannabis companies looking to efficiently capture consumer data and meet consumer demand. Now, BDSA's extensive U.S. cannabis database and ability to quickly adapt to changing regulations in the U.S. markets makes them a prime partner. Through this agreement, both Fire and Flower and BDSA anticipate enlarging our prospective consumer base while supporting each other's continued growth in the cannabis industry. So, from my perspective, there's a very exciting announcement as High Fire is basically one of the premier sort of data points when you're looking at retail in the Canadian market. BDSA Analytics has also been the same thing in the U.S. market. Again, there are other companies and other platforms in both of these countries. That being said, these two have been extremely effective and have had really good results and do have a great store of data so far. Again, Fire and Flower, this is part of their anticipated move into the U.S. markets eventually, so this gives them the revenue ability to do that, and I do think that the data they're going to have by cross-pollinating that High Fire and BDS analytics together is going to be extremely valuable to both U.S. and Canadian consumers, and especially right now as so many Canadian-based companies are anticipating moving into the U.S. landscape and vice versa. You are still seeing that a lot of U.S. brands are still moving upwards into Canadian markets, and I think that having access to both of those market data sets is going to be, again, wildly valuable moving forward, and I do see more and more that Fire and Flower is going to be, if not the sort of predominant retail brand that exists in Canada and potentially in the U.S., they are going to still be a major player. And again, having the fact that they have this access data point is going to be extremely valuable for them as more and more you start to see the bleeding of Canadian into U.S. companies into Canada, and again, into more of a globalized industry. Next, looking at Greenline. And if you're unfamiliar with Greenline, they are basically the retail payment operating system for Canadian cannabis retail. Not the only one, but they are definitely the dominant one, and the vast majority of Canadian retailers use Greenline as again, their POS system. So they announced its new financing service, which is Greenline Capital, a platform providing fast and easy access to short-term capital for cannabis retailers using the Greenline platform. The platform offering is supported by Merchant Growth Limited, which is a leader in providing financing solutions to small businesses in Canada. Due to the classification of cannabis retail as high risk, one of the biggest barriers to growth in our industry is access to capital, said Calvin Ho, COO of Greenline. Now, that's why we're introducing Greenline Capital to help cannabis retailers grow their businesses. Now, we understand that the Canadian cannabis industry is not high risk. Retailers sell highly regulated products in government licensed locations with predictable high demand. This is why Greenline is collaborating with Merchant Growth to offer two new services through Greenline Capital for Greenline customers, short-term financing and lines of credit. And we're pleased to partner with Greenline POS to offer unique financing solutions to the growing customer base, said Aidan Vandering, the Director of Business Development of Merchant Growth. Now, provided that a business, at least 3 to 6 months of business history, Greenline customers can be approved in 24 hours to up to 500,000 Canadian in financing with flexible repayment terms and up to 125,000 Canadian a line of credit. Now, this amount of capital could be the game changer for cannabis retailers looking to expand into multiple locations or simply have a line of credit ready for financing purchase orders and marketing, said Albert Kim, CEO of Greenline. Now, we have heard many times from our rapidly growing consumer base that access to capital has been one of the most frustrating roadblocks to expanding their business, and so Greenline Capital is designed to solve this problem. Again, the vast majority of private retailers in Canada are using Greenline as their POS system, so they have a large customer base. It'll be interesting to see how this does affect the overall expansion of the retail footprint in Canada. Again, there are lots of larger scale brands like Fire and Flower, who I was just previously talking about, I don't believe they are struggling as aggressively with their capital as other companies. But for the private small retailers, which there still is a large amount of all over Canada, that is probably going to be quite essential to them, especially when you're considering some of the margins that people have to play with within the Canadian retail space. Right now, again, you're looking at only about a 30% profit margin from most of your products. So when you're looking at $1 million worth of inventory, you're not making as aggressive of a profit off of that as you would expect. So having the access to a quick line of credit or quick financing with flexible repayment terms is going to be quite a game changer for a lot of those small private retailers. And I would like to pay attention to how that changes over the next year. And I do think that this is going to be one of those things that you're going to see other types of companies start adopting at some point, possibly in the U.S., once banking options become more available. But I do find it very interesting there that, again, when you're looking at this cannabis retail business in Canada, it still is considered high risk. And for Greenline, that's very obvious to them that is not the case, as, again, you are seeing predictable high demand for cannabis sales in Canada. Any Canadian retailer should be seeing predictably high sales unless they're in a very strange location or unless they are selling just the poor quality product. And that has been the case with many stores. Again, especially a lot of these chains that have started in larger scale cities, Toronto, Vancouver, etc., and then expand out into lower population density areas. A lot of those chains have been struggling in the lower population density areas because of the price points that they're operating of, and because they are a chain, you're usually having just one corporate headquarters do all of the ordering and pricing and assessment. And when you go into these smaller, more rural markets, you're in a difficult position because, again, a private retailer can undercut you and also has access to different product and is going to be focusing more on the localized consumer demand as opposed to the provincial-wide consumer demand or the city demand. There is a big difference between what people are expecting to pay in downtown Toronto versus what people are expecting to pay in, again, a smaller town outside of the city. So I do think that this will hopefully give private retailers a bit of a boost, and that, I think, is good for the overall retail industry in Canada. Lastly, today, looking at Myconic Capital Corporation, who was formerly Oriolite Investments Incorporated, who announced that the company has entered into a letter of intent for the acquisition of all the issued and outstanding shares of Mindscape Ketamine and Infusions Therapy PLLC, a mental health and pain clinic based in Houston, Texas. Now, Mindscape was founded by Dr. Quan Henderson, an experienced emergency medicine physician who earned his MD credential and completed his residency at the University of Texas. Now, prior to founding Mindscape in 2018, Dr. Henderson was a co-founder of Neighbors Emergency Center, which was a network of emergency care facilities in Texas, which currently has 6 locations. Now, after ketamine-based treatments helped to alleviate depression-related symptoms experienced by his wife, Dr. Henderson was inspired to open Mindscape to avail such treatments to the general public. Now, the Houston-based clinic, which administers ketamine through intravenous therapy, is characterized by its spa-like atmosphere designed to put patients at ease. And the Mindscape patient experience is augmented by a selection of multimedia, including music and tailored virtual reality content, which are intended to enhance the effects of the ketamine dosage. Now, ketamine was first synthesized in 1962 and was successfully patented as a human anesthetic in the U.S. in 1966. During the Vietnam War, ketamine was the most widely used battlefield anesthetic and has been listed by the World Health Organization's Essential Medicines list since 1985. Usage of ketamine in veterinary medicine began in the 1970s, and presently the most widely used anesthetic in the area of medicine. Now, obviously, in 2000, research conducted at Yale University determined that the small sample group of patients with major depression, the improvement of their symptoms realized within 72 hours could be qualified the drug for use as an antidepressant. And again, ketamine has had some weird scheduling issues over the last couple of decades, but now you're starting to see, again, more and more medical professionals starting to look at this as one of the main go-tos for antidepression, as well as studies with PTSD as well. And as it continues to gain popularity as a treatment for a variety of conditions, Myconic treats its acquisition of Mindscape as a strategic investment in which the company can build out its holdings in the health and wellness category. Obviously, right now, if you've been paying attention to sort of the growth of the ketamine industry, Johnson & Johnson is one of the most obvious examples to look at. They do have a patented product that's out on the market. It's not 100% ketamine. It is, I believe, a synthesized offshoot of it. Very similar biochemically, but there is a slight difference as far as I remember. That being said, you are starting to see a lot more of the same research groups that are focusing on psilocybin, LSD, and MDMA, also focusing on ketamine. Same thing in Canada. Ketamine is being looked at very seriously for, again, a lot of antidepressant and anti-anxiety, as well as PTSD conditions. That being said, I do find that when you're looking at all of these psychedelic compounds, I think ketamine will fit into a different category overall than, for instance, the psilocybin, LSD, and MDMA type of profile drugs, as it is a little bit different as far as the overall effects and feelings of it. And I do think that it still does have somewhat weird stigmas of the whole K-hole and being used as a bit of a recreational drug for too long. I think it'll still be difficult as a prescription drug to continue to do so. That being said, it already is out on the market, so I'm sure you'll see a lot more of it. And again, focusing on these unique experience clinics, when you're looking at the psychedelic market, that is the business model that's going to continue to prevail until regulations start changing. And I do think that, it's interesting that this is coming out of Texas, where there's still weird regulations surrounding cannabis, but again, they're allowing for ketamine pain clinics. Obviously, potatoes and oranges type of thing there. They are different things, different ailments, and different seriousnesses that are sort of viewed. But hopefully, as these types of clinics gain more attention in certain areas, cannabis as well as other drug restrictions start to be alleviated in those same areas at the same pace. That's all for our podcast today. Enjoy the rest of your Wednesday. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.